Hi everybody, Coulter Brown here from the Northern Ag Network with our livestock market report. Well, the month of April was certainly a busy one. It started with a lot of stress in the market, making us pretty concerned as prices pulled back, but then as April wore on, we just got more and more excited about what the market is doing. Uncertainty is still very present in this industry, whether it's tariffs or the current drought situation, but from a market standpoint, cattle producers are pretty well positioned. Today we're going to talk about how tariffs affected the cattle industry. We'll look at where we're at with feed costs, beef demand, how drought could play onto the cattle cycle, and of course take a look at the futures in some of our auction markets across the region. Starting out though, I want to thank the sponsor of our report, the Marsh McLennan Agency. Livestock risk protection and pasture, rangeland, and forage insurance are essential for managing risk in today's unpredictable markets. Weather fluctuations and tariffs impact U.S. livestock demand, and navigating these markets can be challenging. Call Tori Johnson at Marsh McLennan Agency at 406-209-2341 for customized strategies to help you confidently prepare for the future. Well, we just have to start things out discussing tariffs. We began April with the market at or near contract highs, but then on April 2nd, the president announced his reciprocal tariff plan, and it sent shockwaves through every market in the U.S., not just the egg commodities, whether it's financial, energy markets, equities. Of course, the stock market had its biggest one-day loss in about 5 years. So it was definitely causing a lot of concern for the livestock futures. We saw the live and feeder cattle down $15 in about a week, but then the president postponed most of the tariffs and we saw the market start to come back, and boy did it ever. After that suspension of duties, the market found its footing. Like we said, uncertainty is still present and the long-term implications on trade are unknown, but the futures roared back to life. Many of these contracts have set new highs multiple times. Market fundamentals have really taken hold, with the trade focusing on tight supplies of cattle, better demand for beef, and cattle feeding leverage having improved. Over the course of the last month here, live cattle have gained $3 to $7, feeders up 7 to 10, and the bulk of those gains have happened on the front months. The futures seem to think that prices are going to move lower as we get deeper into the future. Now, the cash-fed cattle trade followed the futures pretty closely here. We saw some lower prices after the tariffs were announced, but again, the market came back to life. In just the last week, we've seen $4 to $5 gains in the cash trade, and now we're talking live sales $214 to $218, dress trade $335 to $345. This month's cattle on feed report didn't really offer many surprises. Placements a little higher than expected, up 5% from last year, but actually down 1% compared to the 5-year average. Marketings were up 1% from a year ago, and total on-feed inventory down 2%. Now, fed cattle weights continue to come in higher. That, of course, helped by the higher cash market and also lower feed costs. We're talking steers that are coming in 30 pounds heavier than last year, heifers up 29, and even the cows 22 pounds heavier. Now, those trends are likely to continue, and it does help to prop up beef production that would otherwise be much lower given the reduced head counts. One of the best stories we have in this industry right now continues to be beef demand. With the tariff situation, the uncertainty for the economy, you'd expect beef demand to be lower. We did see wholesale prices waffle a little bit when the tariffs were first announced, but really they didn't give up much ground and actually have marched higher. We're talking the highest beef prices in years as the choice box beef cutouts gain in multiple dollars a day. Now, we have seen a few interesting demand signals. There's been a long-term focus in the industry on the quality of product that we're putting out. And here this spring, we saw prime carcasses exceed select carcasses. It's not the first time it's ever happened. We've seen it twice before in history, but we've never seen it for 5 consecutive weeks. And that's what happened here over the last month. That just creates a stronger demand for our product and keeps more dollars in the system. But it's not just about the prime product. Ground beef is also a key part of this story. Ground beef composes over half of U.S. beef consumption for U.S. consumers, and demand record high in 2024, on pace to beat that in 25. Getting help from trade down by some consumers at the beef case as they're being price conscious and choosing more ground beef, and we're just seeing more demand for beef in general, and that's supporting prices. If you go back to the year 2000, the amount of dollars spent on ground beef has more than doubled. So this is a very positive story. Well, what about feed costs? That's obviously something we're concerned about as we move into the growing season here. Corn prices have actually moved higher here over the last month. A bit surprising given that USDA had their prospective plantings report that showed more corn acres than we were expecting, up 4.7 million from last year, most of those acres coming from soybeans. Now, if we assume trend line yield this year, that would be a record large corn crop. Demand for corn pretty strong, but even so, stocks to use should stay at a comfortable level, and we'll likely see corn stay in the range it's been, kind of that $4.30 to $4.80 money, maybe up to $5 a bushel. Hay prices actually at some of their lowest levels in the last 3 to 4 years. USDA is quoting most of the alfalfa and grass mix from $110 to $150 a ton. In the last few years, we've really increased hay production, trying to rebuild some of those stocks, but again, USDA said 1 million less acres of hay this year, so that could put some pressure on prices, maybe $20 to $30 a ton higher this year. That's what we're hearing from some analysts. But really the toughest foe the industry is facing is an old enemy. It's drought, continuing to be an issue. For a lot of the region, it was a relatively open winter, and the spring just hasn't brought the moisture like it should have. The areas that have been missed continue to get missed by the spring rains. Hopefully that changes soon, but it is causing a lot of concern. You look year over year at where we're at from a drought situation, and many areas are looking worse than we were even just a few weeks ago. Today, 37% of the U.S. cattle inventory is in an area experiencing drought. And if you look at what NOAA is predicting to happen over the first half of the summer, that could only grow. So while the prices we're talking about are certainly great news for ranchers, and you'd think we'd be really talking about growing this herd, but the drought situation affecting such a large part of cattle country is likely to, at the very least, slow expansion. Thank goodness we've got these higher prices, helps to afford some of the higher costs, particularly as we think of having to buy more feed. But it's going to be a challenge. Some producers may be forced to not expand herds or even cull a little deeper. Hopefully, though, the moisture does arrive at the right time and really allow us to take advantage of the opportunities that this market is offering. Well, as we get into some of our auction markets around the region, to start off with the feeders, we gotta talk about the sale at Dickinson at Stockman's Livestock Exchange. I can't prove it, but I think it was one of the strongest sales in the country, maybe ever. Upper 5-weight steers topping out at $4, 6 weights pounding out to $2,300, $2,400 a head. The spread's still pretty wide between the steers and heifers, $35 to $40, and those replacement heifer buyers are having to compete with the feeder buyers. Strong sale at Torrington too. If you compare to the sale 12 months prior, these steers are averaging $32 to $46 a hundredweight more. So you're talking $200, $250 a head more than last year. And the heifers have actually seen the larger gains over the last year. So believe it or not, that spread actually narrowing. As we talk about the weigh-up market, cull cow prices continue to increase. They're following their seasonal trend, and really they should continue to move higher. Of course, they're being driven by record high lean 90s trim values and limited cull cow numbers. Beef cow slaughter down 20% from a year ago, dairy slaughter down 7%, and even bull harvest off 10%. So this strong ground beef demand and tight cow numbers should keep values supported throughout the summer. Of course, we're into the time where we're seeing more cow-calf pairs show up at auction yards across the region, and boy, they are bringing a premium compared to last year, about $1,000 more on the average on these cow-calf pairs and almost $2,000 above the 10-year average. Anecdotally, it seems like a few more pairs being offered this year as, like we say, the moisture just hasn't been there, but obviously there is demand for the pairs. Of course, we're just about to the end of the bull sale season. A few more coming up here, but a very strong year as we look at the averages. Kurt Kangas, the American Angus Association rep for our region, quoted 13,000 Angus bull sales in Montana and Wyoming in the last fiscal years, averaging just under $8,200. That's 1,400 more bulls than sold in the last fiscal year, with the average up $1,000 or 14%. My opinion, felt like as the season wore on, you could start to see the effect of drought on the averages, but nevertheless, some very strong prices for the high-quality bulls raised in this part of the world. And wrapping up like we usually do with the sheep market, I was a bit surprised not to see better prices for lambs over the last month just during the Easter season and the ethnic demand that usually shows up there. Still, prices generally higher. These coal ewe prices have really been moving upwards and holding in there strong, and even a few more bred ewes selling this time of year. So good to be able to have those prices, especially as we're about to enter into the summer months. Well, that's going to do it for this month's report. Thanks so much for joining us. Good luck with the rest of the calving season, and of course, branding's right around the corner too. Thanks so much for joining us. Have a good one.